Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 3rd of March. Let's dive into the week's stock market news. European markets surge amidst economic crosscurrents and political shifts. The Pan-European Stocks Europe 600 index experienced a notable climb, rising by 0.60% in local currency terms and marking its longest consecutive weekly gain since August 2012. This impressive performance was fueled by a combination of positive company earnings and a surge in defense stock values, effectively counteracting uncertainties surrounding U.S. trade policies. The performance of major stock indexes across Europe, however, was mixed. Germany's DAX saw a substantial increase of 1.18%, and Italy's FTSE MIB also rose by 0.61%. Conversely, France's CAC 40 index experienced a decline of 0.53%, while the UK's FTSE 100 index recorded a significant gain of 1.74%. Economic data from Germany, France, and Italy revealed a complex picture of inflation and economic growth. Preliminary figures for February indicated that Germany's inflation remained steady at 2.8%, exceeding anticipated levels. Italy's annual consumer price growth was unchanged at 1.7%, falling below expectations, while France saw its rate drop to a 4-year low of 0.9%. Simultaneously, final estimates confirmed that Germany's economy contracted by 0.2% in the fourth quarter of the previous year, and France's economy shrank by 0.1%. The European Central Bank's (ECB) January meeting minutes highlighted ongoing concerns about inflation. While policymakers expressed confidence in inflation returning to the 2% target, they also acknowledged emerging risks that could push inflation upwards. Some policymakers advocated for a more cautious approach to future interest rate cuts, emphasizing the need for careful consideration of the size and pace of adjustments. Nevertheless, a survey indicated a decrease in consumer inflation perceptions for both the current year and the next 3 years, suggesting that inflation expectations remain well anchored. In Germany's national elections, the Conservative Alliance of the Christian Democratic Union of Germany (CDU) and the Christian Social Union in Bavaria (CSU), under the leadership of Friedrich Merz, emerged victorious with 28.52% of the vote. However, the alliance fell short of securing an overall majority. The far-right Alternative for Germany (AfD) secured second place with 20.8%. The CDU/CSU alliance has initiated exploratory talks with the Social Democratic Party, the defeated party, to discuss the formation of a coalition government. The UK housing market demonstrated continued strength, with house prices rising by a greater than expected 0.4% in January compared to the previous month, as reported by the Nationwide Building Society. This surge in demand was attributed to declining borrowing costs and buyers' efforts to finalize deals before a scheduled tax increase on certain properties at the end of March. Now our insight into alternative markets, the synergy catalyst. Private equity's strategic use of SWOT in post-merger optimization. Mergers and acquisitions constitute the fundamental growth strategy for private equity funds, serving as the primary mechanism for portfolio expansion and investor return maximization. While the initial deal-making and due diligence phases are essential, the true measure of success lies in the post-merger integration process. For private equity, this integration transcends simply merging two entities. It involves swiftly realizing synergies, optimizing operational performance, and accelerating the path to a profitable exit. A structured methodology, particularly one centered on SWOT analysis, emerges as indispensable for effectively managing portfolio companies following an acquisition. Private equity firms operate within a distinct time frame, typically 3 to 7 years, with an unwavering focus on maximizing returns. This contrasts with strategic acquirers who may possess longer investment horizons and diverse objectives. Mergers within a private equity portfolio are often strategically executed to rapidly scale operations, broaden market penetration, acquire complementary technologies, or consolidate fragmented industries. However, the anticipated value from these transactions hinges on a seamless and expedited integration process. Inadequate integration leads to delayed synergy realization, operational disruptions, and ultimately, diminished returns, a scenario unacceptable to private equity investors. This intense pressure for rapid value creation underscores the critical importance of post-merger integration for private equity firms. They cannot afford prolonged integration periods, cultural conflicts that impede productivity, or missed opportunities for operational enhancement. A robust and adaptable strategy is required to navigate the complexities of combining businesses while simultaneously achieving ambitious performance targets. SWOT analysis serves as a crucial navigational tool for private equity's integration strategy. For portfolio managers, SWOT is not merely a theoretical exercise. It is a practical framework that facilitates an objective assessment of the combined entity following an acquisition. It enables the identification of the combined business's strengths, weaknesses requiring immediate attention, opportunities unlocked by the merger, and potential threats to integration. This analysis aids in prioritizing integration initiatives by focusing on areas that will yield the greatest impact, such as leveraging strengths to capitalize on opportunities and addressing weaknesses to mitigate threats. This SWOT analysis also informs the creation of actionable integration plans, with specific strategies and tactics formulated for each quadrant. Moreover, it provides a baseline for measuring integration progress, with key performance indicators aligned with each SWOT element. Private equity funds actively drive the integration process, ensuring that SWOT analysis is rigorously applied. This active involvement includes conducting preemptive SWOT analysis during due diligence to assess potential targets and plan for integration. Private equity firms often facilitate expert-led SWOT workshops to ensure diverse perspectives and foster a collaborative assessment. They mandate that integration plans are explicitly structured around SWOT analysis findings and continuously monitor and revise the analysis as integration progresses and market dynamics shift. For instance, if combined technology platforms represent a strength and expanding service offerings an opportunity, a private equity firm might drive an integration plan to combine technology roadmaps and launch new services. Conversely, if cultural differences represent a weakness and talent attrition a threat, a firm might prioritize change management. Similarly, if cross-selling synergies are an opportunity and disparate sales processes a weakness, the firm could focus on integrating sales teams and standardizing processes. In essence, post-merger integration is a core value creation driver for private equity. The discipline of SWOT analysis, when actively championed, provides a vital framework for navigating integration complexities. It empowers firms to move beyond financial engineering and become operational value creators, ensuring portfolio companies realize their synergistic potential. By leveraging SWOT, private equity transforms integration from a potential pitfall into a powerful springboard, propelling investments towards outsized returns and successful exits.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, Don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T Hub Capital team.